All right. I think I like this Tuesday sessions because it keeps me on my toes. Maybe no pun intended for today because I'm standing up as I go through this exercise today. But it kind of reminds us what we need to look for, uh, how we mitigate risks, how we jump in and out of trades without being worried or without being greedy. I think all of those things come into the picture. And the last couple of weeks, what we have seen is a really deep pullback. Now we're starting to test our green to green, right? We're not there yet, but at least we're starting to test it. And it's been a very long run where we didn't have quite a significant pullback. So uh, because of that long run, these pullbacks are going to be much more deeper. But if you want to redo some of these drawings, if we say, hey, look, you've clearly gone over 38.2. I want you to redraw, so I'm just going to assume you're asking that question and I'm going to redo it for you. So here we haven't gone anywhere near that retracement level here. But once we get somewhere here in this zone, here we have it very clearly. So let's just redraw it. So maybe we have a little bit of a shallower pullback, or we really see those tests. So from this level, I think this is the level where we have not yet seen that pullback. So I've drawn it, and now in this area, now we're in that green to green zone. Okay, so how you draw this fib levels is really critical. Sometimes I don't redraw it and I keep it extended, but I know in my head what I'm looking for. For me, like right now, it's not just the green to green. I'm looking at in an upward bias where I say do not take any counter threads, just stay within the trend. In that context, leaving it as that big one doesn't matter because we have our demand zones that we will use to do when price comes here and it tests it and takes off from there. That's when we want to take the trade, right? We want to see this zigzag setup where we are now, instead of forming lower highs, lower lows, we start to form higher high, higher low. That's really the context of this last couple of weeks. And so, as we're looking for that, as we're looking for this trade last week, when we were analyzing it, we said, hey, look, if on Wednesday we don't know what Powell is going to say, we don't know which way the market is going to head. And I brought up Forex Factory because on the 16th, he spoke, right? On the 16th, he spoke. There was no data shared, just direction. I think he kept leaving the room open for additional interest rate hikes, which could have an impact on the housing market. So far, not yet. But so that's why we were looking at this and say, if we close this gap, which we did completely on Wednesday, but we tested and come out of it, we are good to go for the upside. But right now, it doesn't seem to be the case. Right? It doesn't seem to be the case. And so this gap is closed, and we don't have any business looking at it anymore. At least that's just how I trade. This demand zone that we drew again last week is completely annihilated. There was no need for demand to come up and pick up some additional trades. They didn't have that desire. Another demand zone here gone. Right, all these demand zones keep being taken out. Now we have some demand zones down here, and I redrew additional ones because we're starting to go down. We're in our green to green zone here. Again, just because we're in a green zone, we don't take a trade. especially as we get this lower highs, lower lows continuously, you could make the argument, and to make it easier to see, maybe a 30-minute chart might make it easier to see. You could make the argument that I formed a higher low and a higher high. A higher low, and could I be going this way, right? You could make this argument. It's easier to see on the 30 minutes, but it's the same even if you look at the 1 hour chart. It's the same. You have this pullback within this new seemingly uptrend recapturing move. But still, over the last couple of weeks, lower highs, lower lows, I'm extremely cautious, right? So that's why, like, if you're day trading, like quick in and out, this is a beautiful trade. When you see we make a new high, a higher low, and I want to take this trade, there's two places where you can take this trade. You say, when I take this out, I take a trade, and my low is right below here. And it's not about going for the 2x, it's about winning this trade. However, I don't like this trade because it's like 0.45 to 1 ratio. That's why I don't like this trade way up here. Another way to look at it, let's remove this and let's remove this so that we can see it clearly, is instead of waiting way up here, when we see almost like a railroad track here, we take the trade, right? We're in the trade sooner. Our stop is much tighter. And now, even if we want to go for that 2, it's possible. Why is that? Why do I say it's possible? It's not because of hindsight. It's because these fib levels, the next time I hit that fib level, which again we see that's an area where the market struggled. When we hit that fib level, it collapsed. But that fib level was also a 2-to-1 risk ratio for us, so we can take this trade, right? Now that is quick in and out type of trade, assuming that we're not out of this downward momentum yet, even though we're in our green to green zone. We want to take advantage of these quick moves. I don't have any objection for anyone taking a trade like that. But these trades, I say you have to have tighter stops. As a refresher, tighter stop doesn't mean, oh, I want to take a trade and I'm just gonna willy-nilly choose a spot for a tight spot for the stop. It's logical area, but my entry is now much quicker, right? Much smoother entry, and I take that trade. Then this is a killer trade, right? Beautiful trade. Even if you keep half of your trade in position, when you move your stop, as you get this gap up and you see it collapse, once you take your trade, your stop better be here, right? It better not be back down here. So your whole winning trade is set up and done. Half of it you've doubled, the other half you maybe 1x or close to it. So beautiful trade. I don't have any objection for anyone taking a trade like that. But this is very pronounced downward move, right? It's not a slow move. It's not a slow move like here, like it was big gap and then it slowly drifted down. This is like gap down and then it comes back up, and then over here it's like a big move, right? So it consolidated, kind of still making lower highs, and then boom, it collapsed. So Qs, it's a similar story, very similar story. We wanted to see if this demand zone was strong enough to hold, but once we touched it and came back down, we did not recapture that upward movement. So again, this drawing, you can always say there are areas where I've had deeper pullbacks, and let me take it, right? So still that green to green zone comes into the picture. I'm more concerned about my demand zones, right? But today I just wanted to go over this, redrawing this fibs for you, for anybody who's watching this video, so that you can really understand that my fibs are important, my supply demand zones are important, and if we want to just be consistent, we just keep redrawing them. So again, no trade yet. No trade yet. Here, we didn't get a good signal. Again, if we go to a lower time frame, it is easier to see. We had this, right? We have this setup. We make a new high, a higher low, which is, hey, I'm comfortable. We have a higher low, I'm comfortable. And, if you wait until the high is taken out, that's fine. If you wait for some sort of a signal. Now, in this particular case, you have a doji here. It's not one of those things that we've discussed, right? For us is railroad tracks, hammer. That's what we want to see, or like a consolidation area, right? Those are the ones that really make us comfortable, right? Railroad tracks and hammer. But so if or a big engulfing. Okay, so you can say this is engulfing. You can say this is close enough to a hammer. Let me take a trade. Always have the flexibility to make some minor tweaks, but as you make those tweaks, you're saying, I'm deviating. Here's why I'm deviating, and I'm just gonna go for it anyway, right? So you make those decisions based on that, right? So that's what's going on there. So if you take a trade here, we'll play out a couple of scenarios. Here's your 2-to-1 coming back to this earlier demand zone, right? Which we can take out for now, but like that's your 2-to-1 risk reward. This is where you take your profit and then you let it run, right? And you have your 5-to-1. What anything above 3-to-1, my stop is really, really tight, right? And not even maybe tighter than this, because it has gone 5 times my initial risk. I don't want to give back half of that. Even though the total trade is a winning trade, I prefer to say, hey, after 3, I'm going to keep tightening my stop. So maybe this is, maybe this is where we're stopped out, somewhere here, which is 3-to-1 area, even though the price had gone to 5. You never know the absolute top, you never know the absolute bottom. When you get to a 3-to-1, you have removed additional positions anyway, so you're only left at most with a 1/4%, right? A quarter of your, not 1/4%, but a quarter of your position. So it's okay if that one comes back down here. So things like that. But so that was there, right? That trade was absolutely there for somebody who wanted to take the time and couldn't see it. This is the area, right? So if you look at it on the 1 hour, this is why I switched now for like the second scenario, is this almost like these two is like that engulfing, or you can say maybe it's a railroad tracks. If I take that trade now, you have to wait almost all the way to the top because we've waited a little bit too long. Then maybe now your full position is out. Now, because we're trading the 1 hour, this is actually a more practical entry because we're trading the 1 hour. The 30 minutes I just use for illustrative purposes, right? Not to say you should come back down to the 30 minutes. You don't have time. It is just not possible to come down to that 30 minutes. Like you don't have enough 30 minutes in the day if you have a day job. So it was still possible in both the SPYs and the Qs to take those trades and have winning trades. They don't always pan out that way. So that's where we are. And before we go and discuss if you have taken any trades, I just want to, just finish up this discussion as to what I'm expecting as a setup. So as I said, because these trades were possible, I would like to see we came out of this demand zone in our green to green area. This is not deep enough, right? For quick in and out, okay, but in general, what I would like to see is this. This is what I really would like to see. And so somewhere down here, when this pullback continues, I don't know if it will continue. Like even the futures are positive right now. I don't know how, if it will continue, but if we get a slight area for it to go down some more, and we get like the hammer or one of our patterns, or if we use, let me just move this to the side so you can see. If we use this as a flag, right? If we use this as a flag, and when we break out of this flag, so when we break out of this flag, this is where we say, okay. So when we break out of this flag, we take our entry. Because that's one of our conditions, right? Patterns. Hammer as a refresher, hammer, engulfing, railroad tracks, or flag pennant. If we break out of this, then this is a continuation pattern. Then we can say, hey, let me go for some trade, right? We break out of here. There, we use this is not now a good place because we're not looking at quick in and out. We're looking at our hourly, like maybe a day or two. So this is really the more logical stop. See how it gets complicated when you're looking at longer time frame. Now your stops are wider, your and exits are not coming the same day. But if you're not a day trader and you don't have time to monitor the trade, this is how you trade. And these setups work, right? So just because one fails, you don't stop. These setups work. But this is what I'm looking for right now. What I'm looking for is some setup like this so we can take advantage of it. And it's the same for the spies, right? It's the same, exact same scenario that it's playing out. I think we're going to go down a little bit more. I don't know how far, but I think there's still room where we're going to come down maybe to the 61.8 before we continue. So I think with that said, any trades that you took?
No, not this week, Beanie. It was just like you said, it was a lot of just being patient, waiting for the trade to come to me. I wasn't gonna take a trade that I didn't feel 100% confident about, and at this point, I just didn't see the candlestick patterns. Even though the pullback was nice, we finally got the pullback we've been wanting to see, but I didn't really see the candlestick patterns that really interested me. And I also was waiting, like you said, for either closing a gap and going back up, retesting it, and then go. And that hasn't happened quite yet, at least not to the level where I'm like, let's go, right? It's happened like you just showed on a smaller time frame or kind of just a smaller, more shallow pullback, but not really a nice big pullback that I like to see.
Yeah, and I like how you approach it, right? So right now we came and tested this demand zone, but I didn't see where that demand zone is tested and coming back up, right? Just as to your point.
Yeah.
So that's why it becomes a little bit tricky. This test, is it here? Is it up here? Is it down here? Right? It becomes a bit tricky. When it's clear, when the test started way down here, and this whole thing shifted down, this pullback now would make it clear here, right? But we didn't get that. That's why, like, I feel like when we're just barely testing a demand zone, I think there's a push and at least one more time. Like in many cases that we have seen here, the demand zones, they were actually tested, rejected, rejected momentarily, and then sliced through. That's why we always don't rush, right? We see for this formation, basic zigzag formation, followed by some chart pattern that we like to see. So beautifully said. And so let's just wait and see what happens. Right? Let's just wait and see what happens. So that's the excitement for this week. Yeah.
Nice. Yeah, definitely time to be patient in the market right now.
Yeah, exactly. All right. So with that, then, unless you have any questions, we can wrap up for the day.
No questions today. Thanks, Beanie.
All right. Take care.